G'day listeners and welcome to another APS News Bulletin, keeping you up to date and well informed on everything that's happening in the Australian property market in real time. Guys, jumping straight into it today. Story number one, Australian homeowners gain $59,000 wealth boost. Article by Big Timmy Lawless, head of research over at CoreLogic. Australian dwelling values increased a further 0.7% in June, taking growth to 8% total across financial year 2023-2024, being July 1, 23 to June 30, 2024. Guys, the highlights around this is the median dwelling value in Australia has increased by $59,000 in that financial year to $794,000 across the country as a total median house price. Despite a strong annual gain, the trend growth rate has eased since mid-2023. Supply levels remain tight, keeping upward pressure on housing values, and strong conditions in mid-sized capitals like Perth, Adelaide and Brisbane, which are currently outperforming, have helped keep the growth rate across the board high and allowed us to hit that 8% in the financial year of 23-24. Demand for housing remains high, with interstate migration rates above average and an increase in the number of homes sold nationally. So guys, still very, very tight supply line, but still a lot of property trading out there as well, keeping that pressure on there and giving that, annual dwelling growth rate of 8% over the financial year 23-24. Mr. Lawless continues to write, the growth trends are reflected in advertised stock levels, with the strongest markets continuing to show a severe shortage of homes available for sale. Over the 4 weeks ending June, the number of homes advertised for sale in Perth were 23% lower than at the same time last year and 47% lower than the previous 5-year average. Guys, just to dive in on the significance of that, 23% lower than the same time last year. As we all know, Perth was booming last year. And so obviously to have almost a quarter of the stock levels down again, you can see that we are still in super tight boom conditions. Adelaide down 43% over that 5-year average, and Brisbane down 34% over that 5-year average, are also recording real estate listings that are significantly below that average period over the last 5 years. On the other hand, if we look at Melbourne, listings have risen to be 14% above the 5-year average mark, and Hobart's listings have been elevated for several years, tracking 46% above the average. In summary, guys, the important thing to kind of note on here as well, specifically Hobart over Melbourne. Melbourne, we know, is in a bit of a downturn at the moment. It's going through a bit of a bottoming cycle, as we can see with stock as high as it is. It hasn't actually bottomed out yet. But if we look at Hobart, 46% above average, looking at a 5-year average and beyond that, obviously that comes because 5 years ago, Hobart was still in a very strong growth period. Stock was really, really low, whereas now conversely we're on that downward trajectory in the cycle where the market has come off the boil and is still falling. When the bottom hits, no one obviously, it's still a little bit away from there. Melbourne's going through that bottoming process at the moment as well. But if we're looking at Adelaide, Brisbane and Perth, very, very tight housing markets and undoubtedly contributing quite a lot to that 8% growth rate across financial year 2023-2024. So really good to see that across the board, guys. Obviously the growth has been so strong that it has allowed that national median house price average to lift. And as they've written there, 59 grand as an average across the board, that wealth has increased across Australia. Story number two, guys, mortgage stress drives Australians to extend loan terms, potentially increasing long-term costs. This, guys, is direct from the BuzzFeed news desk. The key findings in this is 13% of mortgage holders, approximately 429,000 borrowers, have extended their loan term in the last 12 months to lower repayments. 7%, or 231,000 borrowers, have extended their loan terms by less than 5 years. 6% have added 5 years or more to their mortgage. The average Australian household is now paying over 21 grand more annually for their mortgage compared to April 2022. 34% of Australians reported struggling to pay their home loans in June 2024, up from 26% in June 2022. Now, the important thing to note here, guys, and what I'm really looking at it and kind of reading here, in summary and diving into those numbers, is you've got a lot of people who are extending their loan terms in the last 12 months. Now, what we're seeing a lot of the time happen here is people actually going through refinances. So a lot of the time when you go through a refi, especially if you take it to a new lender, you're actually resetting the loan term. A lot of people miss this point. If you've owned a property for 5 or 10 years and you had a 30-year loan term, even if initially when you did it, it was maybe 2 or 5 years of an interest-only period, then it would undoubtedly have rolled over to a 25, 28-year P&I period, like loan term remaining. When you go and refi, a lot of the time, unless you specify retaining that time or that length of period left for that loan term, they're going to undoubtedly reset it to a 30-year loan period because they make the most money when you fully reset a loan like that. So something to be a little bit mindful of when you're shopping banks or when you're refinancing and taking it somewhere else. That is the biggest reason why, looking at this, I think so many people have extended. Like we're looking at more than 25% of people out there having extended their loan terms over the past 12 months. And I believe a big part of it is people going through refinances, but then they're also extending it. So they're refinancing down to a lower rate, but they may be 5-10 years into their loan term, and then they're effectively putting it back to a 30-year period, which again is going to lower that repayment for them. So a lot of people, guys, kind of sitting in a bit of that mortgage stress at the moment. Yes, specifically people probably who bought 2, 3, 4 years ago, lower interest rates, thought they're going to be able to hold at a much lower rate for longer. Now coming off those fixed rate terms, now refinancing over to these longer period of loans and to lower interest rates as well. So it's going to be interesting to watch. I know I've had a little bit of commentary around this, guys, in the last probably 3 to 6 months specifically talking about this and kind of a lot of these fixed rates coming off. It's going to be very interesting to watch how this plays out in the next 6, 12, 24 months with mortgage stress and when interest rates are potentially coming down, if they are going to come down in the next 6 to 12 months as well, and what sort of effect that will have on the market. But it's going to be very interesting to watch it play out, guys, as investors like we are. Now, guys, that is a wrap for another APS Weekly News Bulletin. I hope you took some great value. If you did, please send on to someone else who you think might also take some great value out of it. Until next week, guys, that's another APS News Bulletin on the Scouting Australia podcast.